Want to use a PGR in your cereals but have no time for a separate pass? Manipulator PGR can be applied as early as one tiller. Just add it to your herbicide to reduce lodging, increase harvest efficiency, and maximize yields. Talk to your retailer for more info and to confirm acceptable tank mixes.
Let's talk markets here this afternoon. And we're joined right now by John Driedger of Leftfield Commodity Research, based out of Winnipeg, Manitoba. And he has a big smile on his face if you're watching on YouTube, because his Jets are up 1-0 in the series versus the Avalanche. How's it going, John?
Doing fine. Thanks, Shaun. Yourself?
Pretty good. Pretty good hockey game on Sunday night.
That was a little bit of a rodeo on Sunday night, so we'll see what happens. We'll see what happens here tonight. But hopefully they can clean a few things up. But it was exciting. It was exciting. But yeah, love the first round of the playoffs. It's best time of year.
Yeah, absolutely. And it kind of ties into seed going into the ground, of course, too, as things start to warm up and farmers are out in the field, and at least people can, if you are going to the game or you're around the rink, you can definitely actually have a beer outside, which is something that we can't do for most of the winter when it comes to Canada. Okay, John, let's talk about the markets. Overall, 100,000 foot. How would you describe where we are here right now, off of the highs of 2 years ago, but definitely not staring in the face some of the lows that we were dealing with pre-2020?
Yeah, no, that's very true, Shaun. And in some ways, and to kind of overgeneralize, of course, every crop has its own story and so on. But I think by and large, for most of these markets, I could see us kind of going through a window here where we spend time trading in a range. We have been actually for a while, in a lot of cases for the last few months or maybe longer, depending on the market. Where, as you mentioned, like well off of the highs of the previous couple of years. And I think, just to pause there for 1 second, I mean, I think sometimes we forget just how unusual all the different circumstances were that collided at the same time to cause prices to go to those incredible levels. War in Ukraine, drought in Western Canada, COVID, all those dynamics, all that stuff has worked itself out. Now we're kind of well off of those highs, but also, as much as sentiment feels negative in a lot of ways about the markets, we're still maintaining levels that are above what would have been considered actually pretty good levels pre-2020. And so, depending again on the futures market, we maybe whereas previously we'd been bumping up against resistance levels, that's the new support. And so, in a lot of these cases, again, we've been trading in those ranges maybe for a little while, or setting up to kind of continue to trade in those ranges. And I think a case could be made that barring either perfect weather or multiple things stacking up one way or the other, we could spend some time drifting in a range that is again disappointing in the context of recent memory, and yet also from a longer term historical perspective actually pretty good values. And we may just spend some time there again, depending on how things shake out with weather and conditions and yields and so on.
Well, again, let's just use it as an example. September spring week. Okay. Right now, we're around that 6.5. If you look at April of 2020, before the big run up, we're looking at a 5 spot. We're a $1.50 higher. Now, we also were at $14 at a very brief moment in 2022, so we're a lot closer to the bottom than we are the top. But still, if you look at the recent trade in a lot of these commodities, one, less volatility than there was during going through the pandemic, or coming out of the pandemic, I should say, and more. We're definitely in a sideways trade. We're not in this conclusive like hockey stick up or the big drop down. Is that fair?
Yeah, no, I think that is fair, Shaun, and I think you could make that case. I mean, looking at the charts, as you mentioned, you could look at whether you look at a long-term corn chart, you look at canola, those sorts of things. Again, similar-ish type of behavior, but I think also from a fundamental perspective, in a lot of cases, and if we want to talk about something like canola, certainly the market is not anywhere as tight as it was. Again, going back, the previous couple of years. And yet, we got all this crush capacity coming online. Crush demand is increasing. Stocks are not that large. Depending what yields look like this coming year, we're not going to have like a massive canola crop. And so that kind of helps lend itself to provide some support. And yet stocks are comfortable enough globally in Canada. Export demand has been soft to a lot of markets. That puts a ceiling. And so we kind of make time in a range. And in some of these markets, whether it's corn or some others, you get to the bottom of that range, all of a sudden, maybe farmer selling dries up. You unlock some fresh demand. You kind of rebound off the lows a little bit, and then you kind of, rally. And yet at a certain point, it kind of stalls out. Farmer selling picks up, maybe supplies are comfortable enough, that sort of thing. And it feels like there's sort of factors that sort of box us in either way from allowing us to kind of break too low or grab too much of a run. And so again, it just kind of lends itself to kind of moving in this range back and forth here. And as I mentioned, obviously we got the most important weather ahead of us, so all sorts of scenarios could play out. But calling, say, average-ish type of weather or that sort of thing, we could potentially see this kind of a scenario here for quite some time, quite possibly.
Would you call what we're experiencing here coming out of the first 4 months of the year? Have we established, and I hate to call this, but have we established a bottom? I've got my fingers crossed as I say that. Yeah. I just want to let you know.
Yeah, no, I guess I'd put it this way, Shaun. Like, your resolve on that thesis is always tested when you start flirting with those support levels, and so I was always a little reluctant, kind of pound my fist on the table, saying, yeah, absolutely, this is the bottom. But again, you look at something like, say, corn futures, sort of holding that 410-ish, for example, from a long-term chart perspective. I think that was kind of pretty important, and we look back over a long, long period of time, and that has acted as a level of resistance. So that might naturally be a place where we held some support, and we did, and recently, soybean futures had held some support, soy oil, a couple of those markets. Again, if all of a sudden yields line up, we have a bumper crop, those levels, of course, become vulnerable. But there seems to be, at least as of now, some support at those levels. Again, you start unlocking some demand. Maybe it starts getting a little quote unquote too cheap per se. Maybe they've sucked out a little bit too much weather premium given where we're at in the calendar. And so again, your resolve always gets tested when you start flirting with those levels. But so far they have held, and we would have a bias that they hold anyway, if you will. Again, just being an analyst, you're humble enough to know that things happen that you can't foresee with perfect clarity. But
yeah, fortune teller.
That's how I would view it.
Yeah, you're not a fortune teller.
No, we kind of think of ourselves, and Chuck always describes as well. We're more do reconnaissance rather than prediction per se. And that's maybe a more accurate way of putting it. We know what we don't know, and we try and be honest and acknowledge that, even as we kind of project out kind of what we think are some different scenarios and so on. It's all about probabilities, really.
Yeah. So if I think back to the last 6 months, okay. I would say the majority, high majority of the analysts that we've done interviews with, the strategy suggestion has been sell into the rallies. Is in your mind, is it still that kind of a market right now?
Yeah, honestly, I believe so, Shaun. It's one of those, and again, for sort of trading in a kind of a range, which again would be sort of our base scenario or our more likely scenario. We're reluctant to chase it lower when the market breaks. But at the same time, if someone's behind where they want to be at sales wise, old crop, new crop, whatever it is, use these rallies to do some catching up. The phrase I use is maybe a little bit of an itchy trigger finger. Do you need to, kind of sweep the bins and sell all of next year's crop because we tacked 15 cents in the market? No. Do you want to be taking advantage of rallies? Yeah, I think so. Because again, I think from a fundamental perspective, unless we start losing significant production and yield in some key growing areas, which could happen, but until that kind of starts to become a little more imminent rather than just a what if, I think these rallies are opportunities to do some catching up. Because at the end of the day, if we have, normal-ish type of a production scenario in a lot of these key regions, well, supplies are going to be comfortable enough that, well, those rallies probably are going to be pretty good opportunities we slide back down. So that's kind of our base scenario. And again, every crop sort of has its own nuances, but I think until Mother Nature tells us otherwise, I think that's the stance we sort of got to be working from.
Yeah, and a lot of the acres of people that are listening to this show, spring's going to be off to an early, reasonably early start. So that works against you if you're trying to kill the crop. So yeah, there's a lot to be worked out on the production side. From the demand side, though, what are we seeing from a demand for commodities here at this time? As we're seeing a lot of areas start, their central banks starting to cut rates to spur their economies. Where's the demand side of this?
Yeah, that's always one to be honest. It's always really difficult on the demand side, and it's one that yeah, as we chat with clients, so something like supply, like you can touch it, you can measure it, you can feel it. The supply
You
side,
can see it out your window.
you can see it at your window, right? And of course, no one knows exactly what yield is going to be here going forward. We've talked about all the unpredictability of weather and so on, but you can see it. The hard part about demand is, if so, demand is maybe sluggish, and does that mean that if prices pull back, the demand's going to come back? Is demand okay? It's slow today, but it's going to maybe show up a few months from now, or maybe it's gone altogether, and you never really know until well after the fact. Trade data comes out well after the fact, and so that's always really hard to predict. So I think, for example, with biofuels and those sorts of things, renewable diesel, and I mean we got some longer term tailwinds for things like oil seeds and vegetable oil, although not in a straight line. Uh, some other crops, it's I'm a little wary on the demand side, as you mentioned, Shaun. Central banks cutting because of slow economies, those sorts of things. I do wonder from a broader perspective, on the demand side, just you know, uh, all the inflation, high interest rates, long periods of time. Is that whittling away demand in some of these countries, particularly maybe lower middle income countries? That's not always apparent on the surface.
Yeah.
And so I'm a little cautious about that. China's always a wild card. And the other part too on the demand side, if we think about it, say specifically from say Canada or the US, which is kind of where our prices are driven from. Let's just say Canada, for example. We've been have a lot more competition, say from in global durum markets of Turkey, or whether it's peas out of Russia. So it's not just global demand per se, but also competition from other countries as well. So we could think about global demand in aggregate. We can also think about export demand specifically, say out of Canada, or for example, soybeans out of the U.S. And as much as Brazil's crop is smaller, South American production overall is going to be up, and so on and so forth. So there's kind of two prongs to that. So I am wary on the demand side, and I say that not that it's eminently dark and demand's going to be terrible, but that is something that I wonder about, and certainly not complacent about. We're a little reluctant to be too aggressive on our export estimates or those sorts of things. Again, depending on the crop, but that's something we got to be a little wary about. As much as we're walking into a time of year when everything is focusing on acres and yield, and appropriately so. But that demand side is really important, and it's maybe more uncertain than we've become accustomed to in the past.
Before we wrap up, John, I had a question from an audience member asking about the relationship or the correlation between the veg oil market and crude oil, as we start to hear more about some of the, the renewable diesels and the SAF, and obviously that demand is really yet to get fully to its possible, heights. What is that relationship at this point? As we've seen oil, obviously people talk, it's at, I think, just over 80, like about 83, 84, and people talk about 100. Is that a potential lift for the veg oil complex?
Yeah, I think that answer is the short answer is I think the correlation has been tighter, as the renewable fuel and energy becomes a greater portion of demand. It's actually a topic we're going to be digging into a little bit deeper in some of our reports here in the next couple of months, because I think that relationship is changing over time. We want to tag some numerical values and do some studies and so on what that looks like. But the short answer is as energy becomes a larger portion of that demand component, I think that relationship is tighter. I think it is a little bit more complicated simply than just on any given day, say crude oil or diesel prices are up X and therefore veg oil will be up X. I think just as you think about volumes and various renewable fuel mandates and those sorts of things, that relationship is a little murkier or a little not quite so linear per se, if you will. But all else equal, if we see crude oil go racing higher, and I'm not an energy expert, but I think I'm a long-term energy bull or friendly to energy prices longer term. Certainly, that's a tailwind, and so, but something that we're going to be doing a little bit more work on here going forward as well, because that's a really important question, and yeah.
Okay. Well, hey, John, really appreciate you joining us here today on Real Ag Radio. Thanks so much.
Yeah, always a pleasure. Thanks, Shaun.
And go Jets, right?
And go Jets.